Good morning. Welcome to Phoenix Trading Strategies trading room, where strategic knowledge and information allows you to trade successfully. Today is April 17th, 2015. It is 9:07 a.m. For those of you that are joining us for the first time, welcome. For those of you that are coming back again and again, welcome again. Before we continue, let's go to the disclaimer. Disclaimer: future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation or an offer to buy, sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, welcome again. For those of you that are here for the first time, Fridays we usually go over the website and information that we feel is relevant to trading. So by now I'm sure that you've read the homepage and you've made a lot of discoveries that banks do not play fair when it comes to trading FX, futures, or stocks for that matter. And they pretty much have designed algorithms to outperform you in every level until now. We've been able to reverse engineer and counter-program their counter-program to give you an edge so that you have the right information so that when you do decide to actually enter a trade, you know exactly what your risk is, you know what your entry should be, and you definitely know what your potential exit should be as well. Now, at the end of the day, it really comes down to, can you really define the direction of the trade? And can you define it before it actually unfolds? We believe we have. We believe we can. We believe that we do every time. So, because of that, there are specific things that we look for in trades, and you're going to discover those. Now, for those of you that haven't had a chance to take a look at our blog, I invite you to go to the blog. Just hit blog on the homepage, and it'll take you to latest trading videos, of course, latest trades, and this was last week, or actually, yeah. You'll also have trading videos as well. Very, very informative. Believe me, you want to take a look at this. We haven't uploaded the European session that we did this Thursday at 2:30 a.m. in the morning. We will be uploading that one and today's session later on today, so it should be available for you to view tomorrow. Indicators. Indicators is always good. You can always go and read, press on the picture, and it'll take you directly to a description of the indicator. I think it's very important to understand what the indicator does, what each indicator does for the suite, so that you can have a better understanding when you're in the room. The About Us page, this one pretty much tells you about my journey, which in actuality has been your journey as well, except that mine began over 10 years ago, about 11 years ago actually. As a retail trader, just like yourself, I decided to become a licensed broker in 2008. I have a Series 3 and Series 34. I'm currently not registered with anyone right now. And you'll discover a lot of things that I discovered that made the difference for some traders. Chart pattern recognition is one of the features that very small amount of traders were able to really define, understand, and that's why they had success. The second secret, understanding the market makers and how they deceive the retail traders. Because I was able to participate with the development of one of the first electronic communications networks, which is a bridge to incorporate multiple bank feeds, we were able to define and discover what the protocols were that the banks were using to report their data. Very, very interesting. And I think that everyone should really benefit from that. Third, how volume price analysis reveals the high-frequency trades and traders. Believe me, when you discover what we've discovered and what we're showing, it'll change the way that you look at trading forever. And fourth secret, which is my theory, currency portfolio rebalancing. The banks do not trade on the offense, they trade on the defense. It's all about managing risk and exposure. And that's what we show. That's what they do. And when you understand that concept, you can apply it to your trading. And you can see firsthand why they do it. And when you get that, it opens up a whole new world of opportunity for you. And so, yeah, if you're ready to get in the trenches, like every soldier from the very beginning, we will show you how to rise from a soldier to becoming a general in the trade. And that's one thing that we pride ourselves, because we do share a lot of information that normally others would not. And we guide you. The benefit of joining us Thursdays, you have to sign up for that. We're going to put up the link for that. We'll send you an email as well for those of you that haven't signed up for the European session. That session is great because you can actually see the technology or indicators put to the test on the live edge of the market, where we don't really go over anything else. The only thing that we go over is primarily looking for trades. And we do. We find them every week. This week we found 3. Before we closed the room, we were up about close to 80 pips in just 2 hours. That's all it took, just 2 hours, to identify 3 trades. One which was up 40, another one which was up 35, and then another one which was up close to 10, 15 pips. So at the end of the day, we isolate the best trades, and that's what this is about, is isolating the best trades so that you know exactly what they're doing, why they're doing it, and that's all that should matter. At the end of the day, if you define and decode their secret, then you win. That's it. That's the secret. And that's what Phoenix Trading Strategies brings you. It brings out the truth. It exposes them for what they really are, which is businessmen. They're in the business to make money. And so should you. This is a business. This is not a game. And if you treat it that way, then you will have great success. So let's go to the calendar, and we'll go from there. So this morning, they had quite a bit of information on the Canadian. Now, I didn't trade it early this morning because I'm feeling a little bit under the weather. And so today we're going to go over why you shouldn't trade when you're sick. When you're sick, you cannot think straight. When you're sick, your brain is not functioning because your body isn't functioning either. So, if you have a problem in your mind, in general, you shouldn't be trading. If you're under stress, you shouldn't be trading. If you're mad, you shouldn't be trading. If you're depressed, you shouldn't be trading. If you're in love, it better be with a trade. Because if you're in love with someone, you shouldn't be trading. Why? Because it's going to blind you. It's going to affect your decision process. When you go into a trade, you have to be looking for one thing and one thing only: opportunity. And if you can't find it because you're thinking about something that you shouldn't be, then guess what? You shouldn't be trading at all. Now, this is the Euro USD before the announcement, of course, and actually I want to take a look at the CAD because that one really moved aggressively. This was the trade, and on the 15-minute, you pretty much had it. It told you. And we're going to go over the indicators right now, actually, before anything, because I think it's important for you to understand how these indicators work and how they define your trade and why you're here. Because at the end of the day, you're here for a reason. You're here because you want to learn how to get this right. I know this because it took me over 10 years to get it right. So let's go over this, and then I'll explain to you why you should have shorted the US CAD. This is our main algorithm. We call them the power dots, these gold dots. Now if NinjaTrader offered them in diamonds, then I would be showing them to you in diamonds. The reason I'm not is because they don't have them, so I show them to you in dots. Practical. Why did I use gold? Because it subconsciously makes you aware and pulls you in. I need to get your attention. Why? Because it's important. It's a trade, and you need to look at it. Now, being that said and done, what does this algorithm do? 3 things for you. It isolates the price level that the bank's algorithms have defined will not be broken to the upside. So in this case, 122.07 was predefined on the 15-minute twice. They did it twice at the open of the new day and during the European session, and they held. They never, ever, ever, ever did anything else except keep that in line. So what do? It's very simple. You draw a line and you define it with a color. Actually, with this one this way, this one this way. And so now you pretty much know that this red line signifies bearish. If they keep price under it, they're going to be bearish. Well, that's what these power dots do. How many hours in advance did you have before this trade actually kicked in? Because this was the trade that you were looking for. I mean, we're talking about 5 p.m. Eastern to 8:30 a.m. Eastern, right before 8:30 a.m. Eastern. So when you look at that, it sort of makes you wonder, did you have a heads up or didn't you? So it isolates the price. It makes you aware that they're going to start to trade aggressively against that price level to try and trick retail traders to go long. Why? Because that's what they do. Most of the time, they will go flat, the way they've done here, and range trade to try and basically confuse you. Now, if you were thinking that there were trades here defined by the retail market, there aren't. All retail feeds that you're on only define institutional data. So basically, or quotes. So you're not seeing what the retail market's doing. And the retail market really, as big as this market is, we're talking over $4 trillion traded, per day. The retail market doesn't budget. It doesn't move it. It's the banks. So you have to come to terms with that. If you come to terms with that, then you'll understand that you're really not in control. So this is one of the things that allows you to really, really see what you're up against. So they're the ones in control. They're the ones that are reporting the data. So in this case, we're using a feed provided by Kinetic, which in my opinion is unbiased because it has all 12 bank feeds and a few more liquidity providers added. It's not the feed of a broker. So you're not trading on a broker's feed, and sometimes the brokers, as a broker, I can tell you, sometimes they don't put all 12 liquidity providers, or 16 or 20. No, they'll put 4 or 5. So you're not getting all the data, and that's okay. Sometimes, like I said, it's better to know than not know. So this thing defines. It tells you that there's a trade in place, the price is isolated, and that the direction of the trade, in this case, is short, not long. But if price were to violate it, then it would go long. But so long as they trade below it, then that's when this algorithm is very valuable, because it keeps you aware of the fact that there is no long trade, and you should not be going long. However, you should wait for opportunity every time they come and retest this to take a short position. But in this case, if everyone was waiting for the Canadian, everyone would have waited. As soon as it started to go long but never reached it, you knew that it was over. So being that said and done, the fact that it had gone down, down, and waiting for another down, you knew this was going to happen. So even though these formed here and they broke through it, it's this price level that you were really counting on. This is the one that held the game. What defined this trade? The trade was defined already. When they hit it hard. They came down 87 pips. Now, 87 pips in a matter of 30 minutes is a great trade. We've seen them, we've taken them, we've done them on multiple currency pairs simultaneously, and you'll learn to do that as well. Now these plus signs here, this is a trend stop. So if the trend is broken, then what does it tell you? It's short. What did this tell you? That it was a short trade. It was predefined. So when they came up here and they broke the trend stop, it really didn't make much of a difference, because in actuality what they needed to do, they needed to break above these pivots right here. See these magenta dots? These are pivots. So these are reversals. Every time there's a reversal, they show up. Now, historically, if you're seeing that they're coming up very close to the price level, which has already been predefined by them not to be broken, then all you have to do is just wait. If price action doesn't get to them before news announcement, they're never going to, and they're going to reverse, which in that case, this is what it was. Now, many people would have said, well, this is, a W, Ricardo. This came down, but it came down because they were really going to go long. So my question to you is, did they go long? The answer is no. They went short even further. So now they've even counter-programmed that. A lot of people look for W's and M's and flags and head and shoulders and, all this nonsense left and right. They've already counter-programmed. Moving averages. Moving averages never had a chance. So if you're using those indicators, you're using outdated technology, outdated information, and that's why you're losing. Now, what are these dots here? These dots are trend dots. So these basically are telling you that the trend is bullish, or in this case, the trend is bearish, until it changes, of course. So they do help. The transition, the gold dots in between, basically telling you, again, it's transitioning from a bullish state to a bearish state. This is a high frequency bar, and I'll show you why. You'll see why that is. Now, like I said, if anything, you're going to learn from us that the way we trade, we're not in a hurry. We take our time. But when we define the trade, no one takes it. So if you were trading during the European session and shorted this, you could have easily, right before the announcement, had this trade and picked up a good 57 pips and been done with it, and then gone to bed. Sometimes I do that. Sometimes I'll trade the Asian session and not worry about these. Some good pairs to trade are the yen pairs, of course. And let's take a look at the US yen just for Pete's sake. But here, you can tell here, this took place, this was announced out the gate, right the new day, 5 p.m., that it was going to go short, but then it was predefined again at around 6, so this is 7:15 Pacific, so that's 10:15 p.m. Eastern time that it was going to go short. And it did. How many pips? Quite a few. 48 pips. Now, if you see them repeat themselves twice, and you see pivots under them, take the trade. Take the trade because it's going to make sense for you to take it. You won't make any mistakes in that regard. But again, I've told a lot of my students there's great opportunity in the Asian session. It's huge. Sometimes if you're up during the Asian session, take the trade. This is the pound Aussie. Look at this thing. This thing runs. And this is on the 15-minute that it was pretty fine. I could have taken this trade here because whenever you see this curve like this, the power dots tell you it's seriously going long. There's no question about it. Don't doubt it. Take it. That's 107 pips that you could have picked up. 107 overnight. So many times, we look for trades and we don't see them. But now the next question is, well, how do we get the alerts for this? Good question. That's why we created this, the Market Analyzer. Market Analyzer allows you to get all these pairs that I've added here, and these are the pairs that I like to trade. Whenever it says Analyze Me, means the power dots have formed. So this would have formed yesterday at 5 p.m. Eastern for you to take a look at. It would have screamed at you, like right now. See how it's saying the DAX? Take a look at the DAX. But there are no dots here. But it's highly active. However, the NASDAQ and the mini Dow are. Aussie yen is in congestion, but let's take a look at the futures. Let's take a look at the Dow. Look at this. Now here, I would have never taken this trade here. I would have, and I'll explain why. Because as the trend stop is coming down, it's compressing against this. So eventually, this was going to basically just be broken through. And this happens. It's not a big deal. I'll show you how to understand both. So it did go short. And again, it announced itself right here. This was 8:30, and it came down. Now, maybe you would have missed the initial candle, but maybe you would have caught this one, which was 41 points to the downside. It's not bad. Look at it from that perspective. Gold. Gold's a great trade. Look at this. Out the gate, twice it announced it was going to go long. Gold. Well, but, being under the weather, I can't really trade. So this week I really didn't have much to show. $9.50. $9.50 on a trade like this. That signifies if you had one contract, believe me, that one contract was worth $950. So all this is very, 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 very important for you to realize and understand. And we haven't even looked at volume. I haven't even shown you our volume indicator. Exactly, 950. So I'm just showing you our main algorithm. This is the one that makes the difference. This is the one that gets your attention. Everything else just confirms. That's what it's about. So give me a minute. I'll be right back, and we'll continue to look at more. Okay, so what we do here is we define and predict the direction of the trade before it actually unfolds. And I think that's very important for the retail trader. I think that's probably one of the most important things that should be learned. So, like right now, look, it's telling you that it's going to go long. Let's see if it does. I mean, it's held this price. And actually, you know, I'm actually glad this is doing it right here on the 15-minute, because you can actually see, you can go to the smaller minutes on it and predetermine that. But let's put a line here real quickly so that we can see in the smaller time frames how the volume is reacting. You know, I think it's sometimes very important for people to understand volume. Now, how do we understand volume here? Let's add the next indicator. This one is the doozy. This one took a lot of thought to develop, but it is our gift, and it is our algorithm. So here, for instance, now you have you knew what happened here, went long, came back down, but now they've predefined this price level to see if they're going to hold it or break through. If they break through, they come down. But let's take a look at the volume. The volume here is very unique because it shows you how they are basically driving it. So in this case, when they drove it down, look at the amount of volume. You have buying volume. You know, this is in the billions. It's not in the millions. So this was 4.034 billion on the buy side, 4.260 on the sell side. A lot of high frequency. A difference of 226 million. Why is that difference there? And why didn't the buyers buy or offset? Volume here is defined differently than in any other way that you've conceptually used it. This is a zero-sum game. So 1 minus 1 equals 0. At the end of the day, the trades have to balance out to 0, because someone has to win and someone has to lose. Whenever there's a difference of orders, in this case the cumulative volume that shows up and has not been filled, that means that there were negative quotes that were not filled by the buyers. In this case, why? Because they were never interested in trading below 1290. Now they are, and they're doing that right now. Next candle. You can see how the volume just drops. 1.664 billion on the buy, 1.810 billion on the sell, a difference of 146 million. Again, with all that negative volume, why didn't they break below this price level? The reason for it is very simple. They are not interested in breaking below 1290. Next candle. This one's a little better. Look, 1.295 billion on the buy, 1.277 billion on the sell. Excuse me, a difference of 18 million. That's it. That's all in this little candle. Look how it moved up and down, but they never broke below this price level. However, this is a bearish candle with bullish volume. Can you logically accept that is the question? You have to, because they have designed an illogical way of trading. And so when you understand the institutional mindset and how they've designed their protocols, that's when you win. So in this case, this is a bearish candle with bullish volume. The next candle, of course, would be bullish. And here it was. Came up to the trend dot, never broke above it, and the trend stopped, as you can see, and that's why they came down. So here in this one, look at the volume. 1.231 billion on the buy, 1.002 on the sell, a difference of 229 million. It was bullish, but it didn't drive price action aggressively higher. And that should have been a sign for you. The fact that it didn't break above these two previous candles was enough, and the fact that it bounced right off the trend dot basically told you it wasn't really going to drive price any higher. Now we're here. Look at the volume. On the live edge of the market, 606.7 on the buy, 651 million on the sell, difference of 44, difference of 36 now, 32.5. They're starting to, you see how volume is constantly changing here? Well, this is the depth of market that you can't see in these candles. The human eye cannot conceptually see this. One, because they're not letting you. So two, we had to create the technology to give you that insight so you can see. Now, when does it matter to look at volume? Whenever the power dots show up. That's the only time you should ever look at volume. No ifs or buts about it. But you can see the volume bars here. Not, this was big volume, then suddenly it died. So the gray bars signify that these candles are inside bars, and they are. They're trading inside this previous candle. This is a look. This is a bearish, a bullish candle with bearish volume. How absurd is that? Just doesn't make sense. So a lot of these things that we're showing you here are completely illogical to the human mind, however, completely logical to the protocols that they've designed. And that's what we try and teach you. We try and teach you to understand what they've designed so that when you start to look at this, it makes sense. But they did it on purpose. They did it on purpose to confuse you. We are just trying to show you and disclose to you how they're doing it. So yes, the volume indicator is a great indicator. The sentiment, this one pretty much I use just to move, if I have a stop loss below this level, I'll use it once it goes extremely bullish, then I'll move my stop loss from here to break even or a little bit of a take profit, and then I'll let the trade unfold. Why? Because once it transforms, then at that point I know that it's on. Like in this case, because it's bearish, the minute it would go bright red, then at that point, if I'm short and I have a stop loss, up here, then I would move my stop loss to more of a break-even level from my entry. But look, they're holding this price. They do not want to go below 1,200 in 1,201 in this case. So, when you see that information, does it make sense? Does it give you clarity? Here's the next thing that you have to understand. Because these power dots define the price level, define increase in volume and momentum is coming, and define the direction of the trade, does that not eliminate fear and doubt from your decision process? When you confirm it with everything else that we've shown you, the only thing on your mind should be, where is your entry, where your potential exit should be, and in this case, your potential exit should have been up here. And even where the pivots are, up here. This is where your potential exit should have been, at 1207.50. See, now it's going long. So did the power dots lie? No, they didn't. They told you ahead of time that the banks were not going to go short from this price level. They held. But they tricked everyone believing that they were going to go short. So now everyone that did go short is now probably shooting themselves and saying, foul, why did I take that trade? When now this is going long. So these are exciting times. especially if you're here, because you are literally at the final frontier to understand volume, price, analysis. This is where a lot of information that you've learned on volume spread analysis is irrelevant. Number one, because most of those guys have never, ever been brokers or have ever been in the industry on the back end the way I have. I've walked your path and then gone further. And the reason I did it in 2008 was because I couldn't figure this market out for the life of me. So I knew that if I ever wanted to really, really become a pro at this and really, really get an edge and do what I love the most, which is trade, then I needed to become part of the industry and learn what happens behind closed doors. So all the research and insight that you've been looking for is here. It's defined in our technology and it's defined in our training. And it will make a difference for you, because at the end of the day, that's what we try and do. We try and help people understand what the market's going to do. We cannot promise you complete success 100% of the time. It doesn't happen, but it does make a difference. And that will help you at the end. So if you can learn to appreciate that, then you'll love this technology, because it will make a difference in your life. Look at this trade. Everyone thought it was going short, yet we knew that it was going long. It was predefined to us right here that they were not going to go short anymore. But I'm telling you, a lot of people went short on this one. And I said, no, this is going to go long. And they just tested it right under, just like saying, just a little bit. But then they took it long. And that's all that really matters. So if you're interested in learning how to trade these markets the way they're currently being traded by the banks, and to understand their protocols, to understand the mindset of why they created these new protocols, then you're at the right place, you're at the right time. You're at the final frontier. Because the information that you're about to get is so insightful, is so promising, will make such a difference in your life the way we've made in many, many people's right now that are trading with our software. That we've got guys that make $1,000 to $2,000 a day. Some guys even make, up to $10,000 in some news events in one shot. In one shot. I mean, it's amazing. Other people are starting off small, they're still demo trading, but everyone is having success in one form or another. And more importantly is that you get to come into the live trading room with me Thursday mornings during the European session and actually see the software in action. I mean, we look for trades just like this one was predefined for us right now. We look for those trades. We look for these trades. We look for these trades. We don't mess around. We put it to the test. We record it and we post it. You'll find, like I said, you'll find that during Thursday's session, in a matter of 2 hours, 2 hours all it took, we were up over 70 pips. Over 70 pips in 3 trades. Show me someone that does that. Because I do it, number one, to help people continue to understand what they may be doing wrong. But number two is to help them also take advantage of those trades that I identify. Because it is the one day that they could actually take those trades live if they choose to, and start to recover on their investment in the software. That, to me, is important. That, to me, makes a difference. Now, see here, they went right to it. It's having a really hard time breaking through this level right here. But this was pretty much a $2 move. If it breaks above this level right here, 1203, then it'll scream up to 1205. May not have the momentum anymore. But it was a $2 move. That's pretty significant. Now, another thing that we show you is that whenever there is a news release coming out, and there are more than one, in this case with the Canadian there were 3 coming out, this thing's going to move. So, if you understand the direction of the trade, then you know that the movement, there will be follow through in the movement the way there was here, 87 pips. That's a big deal. In a matter of 30 minutes, come on. Look at the Euro USD. Why would I have not taken the trade on the Euro USD? That's the question. Because here, that's how we ask. We ask, why would I not take this trade? The reason for it, it didn't make sense. There was nothing to guide us here. This one said long, and it did. It did go long. You know, it went long during the European session. From here to here, 87 pips. But would I have taken this short? No, I didn't have any power dots guiding me, telling me, short this thing. No, I would not. If I, maybe in the higher time frames I would have, but in the smaller time frames I didn't have it. So I need confirmation in the smaller time frames besides this one. I'm going to show you something on the pound Aussie. When this happened Wednesday evening, there was a rate announcement by the Central Bank of Australia. But what was interesting about this trade, where is this thing? Is it this one? Yeah, I think this was it. So out the gate, this thing just slammed. I mean, it came down like a stone. But you could really see it more defined on the 10-minute. You can see the power dots. I usually use the 15 and 10-minute to identify power dots, and if I see them, then I know that the trade is on. So in this case, yeah, it was here. It was defined, look at this, the day before the close. 1, and then 2, right here. So this told me that if price action did not break above 193.55, it was going short before the announcement. Before the announcement, the trend dots and the trend stops were basically announcing short. But look at the move on this thing. If you would have been in this trade literally 15, 20 minutes, a half hour before it occurred, you were looking at 200 pips in one trade, in one afternoon, or one evening, of course. And if you're here in the U.S., what does that signify to you? That you don't lose sleep trading the European session. So wherever you live, wherever you're at, we will show you when it makes sense. Now again, you know, depending on the news, we're coming up with a report that will actually show you the days that you should be paying attention to the trade. See, the U.S. pairs, these really didn't do much. It was everyone was interested in the Canadian. This is the one that was going to move. The Euro USD had moved a little, the pound dollar moved a little, nothing extravagant. As you saw, the US yen didn't really do anything at all. So the US pairs really didn't do much. And right now, in a matter of 8 minutes, we have another report, which is consumer sentiment, and that's a big one. We have leading index month on month, inflation expectations. You know, these are not, they're okay, not the greatest, but they're okay releases. But when you have 2 releases like this one coming out simultaneously, and then maybe you have 4 or 5, that's when it's going to move. See, like here, average earnings for the pound, claimant count change. You had quite a few releases here. That's when it made sense. So when you look at the pound dollar, you're going to say, well, did it really move during the European session? We're about to see right now. It did. During the European session, it said go long. So if it told you to go long from here, would you have taken this trade? This was a price level defined on the 180 minute time frame. So long as it traded below or held, see, and we had looked at these other trades, as soon as it broke above, it went up. We were short here and on Wednesday, and we were actually up about 20, 25 pips on this trade. before we closed the room. Then, of course, about an hour later, it went long. But it didn't matter. We took the original trade and we were out. But here it told you again, go long. Long to you signifies what? 122 pips during the European session. If you live in Europe, this was your trade. You didn't have to worry about the U.S. session. But look at how they come right back to this level. And they're holding. And they're waiting for consumer sentiment. And they're just holding right now. I mean, literally just holding. Now, granted, this is a bearish trade right now. The question is, will it continue to be? That's the next question. So there's a lot of things that we bring to the table to help you predefine what the trade is. And believe me, when you see us doing it live, that's when it all comes together and you say, oh, wow, okay, so this is not a difficult strategy. This is a very easy strategy to learn. And what I've done now is that, normally I give a 3-day seminar along with, when you buy the indicators. So we dedicate about 3 hours each day. And I usually like to spread them out. Why? Because I feel it's too much information. And you need to really learn how to identify the levels, the price levels with power dots on the short time frame, on the long-term time frame, everything. So without them, you can't really do anything. Now, why would I not take a trade right now based on consumer sentiment, even though they're coming at this price level and they're holding? Because I don't have any power dots down here, and I don't have any power dots up here. Had them up here, and they did go short, but I don't have anything telling me right here that I should continue to go short. All I see is driving price away from this price level. Well then, to me, this is a long trade with 5 minutes to go. It's not a short trade. So I'm not really interested. If we look at the Euro USD, you'll probably see the same thing happening. See, same thing. They're going long right now. They came, hit this level, after coming down, and now they're holding. But again, look, ooh, W. Let's go long. No, you wait. You wait and see what they're going to do. Never guess. I hate guessing. Do not assume. Wait. They'll give you the trade. But make sure that you have the right trade, because if you don't have the right trade, then you have no business in the trade. And that's what we teach you. We teach you to trade by a set of rules, to look for specific setups. And if they're not there, you don't trade. That's the bottom line. If they're not there, you don't trade. Look at this. Right before, this was yesterday morning, you could have taken this trade long. This was 111 pips on the Euro USD. And then this one, again, said long, but I would have actually waited for it to come right back up. The way that it chopped, the pound dollar was much cleaner. But let's say you would have gotten in here. That's another 85 pips. So as you start to look at this, you have to ask yourself, okay, what really makes sense? That's a question that only you can answer. I can show you how to make sense of this. That I can. See, look how they came on the 15-minute. This is a level that, they've been literally trading off, which is 107.45. and they bounce to the upside, and we have 2 minutes before that announcement comes out. 2 minutes. And look how you have pivots here and here. Would I be going long here? I would not. However, I would prefer if I would have had power dots here. And because I don't, I won't take that trade. Now, some of you may take that trade. I won't. I'll look for one that actually fits my profile. Question. Let's see. Once you're in the trade, what are your trades, pivots, levels, and swing, high and lows? Good question. You mean, am I looking for a swing trade or am I looking for an intraday trade? I don't scalp. That is for sure. Do I look at the highs and lows? Yes, I'll see the highs and lows on the higher time frames to see if they're there. If they're not, then I won't worry about it. But if they are, ooh, right there. If they are, then basically I'll look to identify to see what the next levels are. The pivots help me identify where they're going to end up going. Now, if there's quite a bit of announcements coming out, then yes, anticipate a much stronger move. See, in this case, look. See why I told you I wouldn't take this trade? It didn't give me what I was looking for. The announcement just came out. Granted, they've been trading above this level, but look, suddenly it flipped and went short right here. So they used this level as a resistance level. But it didn't have the ingredients that I was looking for, so I was not interested in taking this trade. So yes, I look at the highs and lows of the day, definitely. You know, I want to see how this is predefined, but we also look at the higher time frames to define if those levels are there. And that's one of the things that, you know, predefines some of these trades. When you do that, then you can practically predefine your outcome. That's all that matters. Nothing more, nothing less. Let's see what the numbers are here. Ooh. Okay, so the number was positive for consumer sentiment. Leading index was negative. Inflation expectations came under what last month was, so that's why it's a little iffy. And that's why it's acting up right here. Again, too much risk for chop. Not worth it. But the Asian session right now is kicking, and it's kicking hard. And a lot of these trades are being predefined. If you know the price level, and you know that something's going to happen during the European session, why on earth would you not be looking to go long on this trade? Why? See, there was no direction of this trade with the announcement, so I wasn't interested. It wasn't going to go down any further because they're stuck on this price level, 107.45. So all that information right there was predefined to you. It was given during the Asian and European session because they hit it twice and didn't want to break below it. So when you look at the trade from that perspective, you know, again, you're looking for information that makes sense. Now if we look at it on a 30-minute, you may see a different picture. Right here. Again, this level is now predefined on the 30-minute. See? As much as this came short, they're holding 107.51 aggressively. So even though the news came out, will they be trading below this price level? The answer is no. But all these fundamental trades, oh no, it's going to go short. Sure it is. So if I would have been looking at the 30-minute, based on that, would I go long? I would have looked for confirmation on the smaller time frames for it. If I don't have it, no. Will this go long? Sure. It has a potential of coming right back up here to 107.87 and 108.19. That's really what it has. Now, was this price level defined in a smaller time frame? Not at that level, so close, but it was defined here. And now you see that it's going long. So you're looking for levels of confirmation consistently. And when you see them and you understand, then at that point, that's when you take the trade. Because you're defining your risk. That's what this is about. It's about risk, but understanding the bank's risk at the same time. Now, if you see this happening here, would it have made sense if you know that there was a line here to look at volume? Yeah, of course. Go to the volume and immediately confirm, okay, what are they doing here? In this candle, 387 million on the buy, 455 million on the sell, difference of 67 million, but they wouldn't break below 107.46 with this negative volume. Why? Because the buyers will not buy below this price. The buyers are interested in taking this long. The next candle, 479 on the buy, 536 on the sell. It's a bullish candle with bearish volume. Seriously? 56 million on the negative. Again, the sellers are quoting below this price level and the buyers aren't buying. And so then at that point the sellers realize, well, then we have to, sell above this price level because no one's going to buy from us. Exactly, correct. So here, again, negative volume. I mean, it just doesn't make sense. 431 on the buy, 465 on the sell, a difference of 33 million on the negative, and you're looking at price action continue to further itself from 107.45. This was the one that finally had some bullish volume in it. 328 million on the buy, 267 on the sell, difference of 62 million on the buy. And because they furthered themselves away from this price level, now of course you have this candle, which is basically driving up even higher. But first it came down. It came down to test this level, or come close to it, but no cigar, never broke it, and then boom, bounced right off of it. So when you look at that information, that's when it becomes clear. But again, this is, a process. It's a learning curve. And it doesn't take more than a month to really get your head wrapped around this. And when you see it live, when we trade it live and you see, why I'm taking these trades and how I'm explaining to you why these trades are taking place, then that's when it all comes together. That's it. That's the secret behind the sauce. So, yes, do we give you an edge in trading? I believe so. Probably one of the best. Can we forecast ahead of time what's going to happen? Yes, we can. And with good risk management skills, you can take advantage of it. You can predefine the trade and make pips. You can learn to trade binaries with this. You can learn to trade futures with this. You can learn to trade stocks with this. You can definitely trade Forex with this. The algorithms adapt. And yes, using NinjaTrader is a bonus. I like NinjaTrader. Why? Because it has allowed us to use our algorithms. They work very, very well. I use it specifically for charting. Who am I to tell you where to trade, who to trade with? I can't do that, and I won't do that. That's not my business. That's yours. But I can tell you what works and what doesn't. And we've tried other platforms, believe me, and our algorithms just do not function as well as they do with NinjaTrader. Now, if you're using NinjaTrader for the first time, you can demo it for free. You can use FXCM's feed, their data feed, demo it for free. While you're learning. You don't necessarily have to buy the license right away. No, use it on demo mode. Execute your trades wherever you're going to execute your trades from. And Once you make your money back, then at that point, define if you're going to buy the license, lifetime license for it. I suggest it. I recommend it. I like NinjaTrader. It is by far one of the best professional platforms out there. So I think it makes sense from that perspective. Let's see what the pound dollar did. So the pound dollar did just the same right now. See? It's trading right above this price level. It's not going long the way the euro is, but it's not challenging it either. So eventually this one will go long. Well, if you know that the euro already went long, then doesn't it make sense to, think about taking a position to go long from here? Like I said, I wouldn't at this point. It just doesn't make sense to me. I like to see power dots, and when I don't see them, I'm not game. I need to see definition. There is one here, but I'm waiting for the second one right here. On the euro, we have 3 here. Here, we just have 1. So, and this is a 30-minute. So a lot of the stuff that we're showing you and we're teaching you right now is very valuable information. See, this is the euro right here. This level was identified on the 30-minute that it was not going to go short. And we show you how to use NinjaTrader, how to basically get everything in line. There's nothing nicer than understanding your platform and understanding your indicators. When you do that, then everything else just comes together for you. So being that said and done, let's go to the next sequence of events right now. And my email is ricardo@PhoenixTradingStrategies.com. That is my email. If you want to Skype, you can Skype me. And my Skype is being typed in right now. If you wish to call me, I have a telephone number. I'm more than willing to answer any questions that you might have. And if you're really serious about this and you want a payment plan, I'll give it to you. I'll make sure that you can afford this and get you started. Right now is the time to start trading, guys. This is it. We're at a tipping point where the volatility is going to go through the roof, and there will be trading opportunities left and right. Now, there may not be a lot of trending, but there's going to be a lot of range trading in between. There is so much uncertainty out in the world right now that you can't afford not to look for an option, not to look to depend on an economy that can at one point just flip on you. There's a lot of people out there that belong to corporate America or to the corporate world. But you're just a number. I know this because I used to be. I used to work for the 3rd largest futures commission merchant in the U.S. And then suddenly our CEO decided to embezzle money, and we were all out of a job. Suddenly, we were no longer part of corporate America. We were out on our own. So, yes, it makes a big difference. Yes, I do use the radar, and I do show you how to use that correctly. I'm not showing it here because I don't think it's relevant, but I do show you how to use it. Yes, please give me a call, Miguel, so we can talk. Yes, it was at PFG, John. So, yeah, don't lose out. I'm not going to be selling a lot of licenses for this. We've already, sold quite a few, and believe me, once we meet our quota, we're only looking to sell 300 licenses, and that's it. Why? Because I believe that's a fair number for people to share this with. If I sold it in the thousands, then the banks would consider investing billions again to change their protocols, and I don't want them to do that. So I'm only going to share this with a small group of you that really, really want to learn how to trade and that are looking for that edge that you don't have right now. We will help you to define your trading strategy. I have guys that, are in trades for a day and a half to 2 days. They look for those types of trades, those type of swing trades. That's what they like. I like intraday trades. I'm not comfortable staying in a trade longer than a day. It's just not me. I like to be in a trade for a few hours, make my pips, make 40 to 80 pips, and I'm done. I move on. My goal every day or every week is to try and make 300 pips. Now this week I didn't really trade except for the European session because I was a little bit under the weather. And I'm still under the weather. So, like I said, if you're not in the right mindset, if you're sick, if you're stressed, if you're angry, if you're depressed, don't trade. Don't trade because it will affect your decision process. When this technology is meant to take two things away, fear and doubt from your decision process, because the direction of the trade has already been predefined. You just have to look for it. And you don't even have to look for it. The market analyzer will guide you to it. I mean, my God, how much easier does it get? It doesn't get any easier than that. See, look at here on the US CAD, it's telling us that it's trading on the 15-minute, and there's a power dot right there. Right there. Now, it went short. It came back up, but it's telling you again that it could go short again one more time. This is a 10-minute. On the 15-minute, we defined it here, but on the 10-minute, it reconfirmed it. Your entry could have been here a third time, and you wouldn't have had to worry about this trade. So we'll take all these things into account because it's going to define the way that you trade. Now, if you don't, if trading is just a hobby for you, then great. But if you want to make it a business and eventually substitute your income from it, your current income from it, then take it serious and take me serious. Because I'm not here to play games. I'm here to help people that want to help themselves. God is not going to come down from the heavens and do it for you. I can assure you that. Because many people find God when they trade because they lose. And when they're in a losing trade, with all due respect, and I've been there because I did it in the past, we're like, oh God, please, 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 please bring that trade back. I promise I will never do it again. I shouldn't have gone into that trade. But please, 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 please bring me back to break even. Please, I can't afford this loss. I hate having that type of relationship with God. But I love having this relationship with God when I say, Lord, thank you very much for telling me the direction of this trade, because this software is the bomb. You have helped me to take the right road. That's the type of relationship that I want to have with God. Not the one where I'm losing and I'm like, oh God, please, and I start to, put my hands on my head and pull my hair and say, oh God, please, no. We don't have those types of conversations with God. No. Our conversations are different. Our conversations are of gratitude. So if you're looking for that type of relationship with God, well, then you need to join us with Phoenix Trading Strategies. If you're looking to eventually substitute your income or complement part of your income, Phoenix Trading Strategies is where you need to be. We're giving you cutting-edge technology that no one out there has. This is it. This is the final frontier. You either take it or you get left behind. And if you need help, well then contact us. We will help you. Again, let me put my email down for you. I think it's very important to have an open line of communication. And if you're really serious, I'm really serious about helping you. So in the chat, I just put, again, my email, which is ricardo@phoenixtradingstrategies.com. and my phone number, which is 818-431-1357. Do not call me during the European session. I may be trading or I may be sleeping. And I only trade the European session twice a week, so I'm not going to tell you those days because I know you're going to call me. U.S. hours between 12 noon Eastern and, let's see, 11 p.m. Eastern time. You can catch me on the phone. You might even catch me on Skype. Send me an email. I'll respond to it. I promise I will be there. A lot of the traders that I have right now that are using my software, all of them have access to me. They can call me, they can email me, they email me their trades and tell me, what do you think? And I give them my opinion. And I tell them if it's a good trade or not. Why? Because I want them to succeed, just like I want you to succeed. Now, this isn't for everybody. Make no mistake, there is risk in trading FX. If you can't afford to lose money, you should not be trading. You should be demo trading, which is different. But if you don't practice, you'll never get good at it. And if you don't have the right information, you're never going to get it. So you're getting the right information here in order to get better at it. So that's all I have to offer you for today. As I said, for those of you that are joined us for the first time, welcome. For those of you that are here that have already gotten the software, well then, congratulations. You know where you're at. Thank you for joining us here at Phoenix Trading Strategies. We will see you Monday morning at 9 a.m. Eastern. Have a great weekend. Take care.